Supply and demand fundamentals are in fact playing a big role. Now hear me out. Fed pumps money into the system. Liquidity supply equals the Fed. Treasury issues debt. Liquidity demand equals Treasury. If the Treasury issues debt, someone has to buy it. When there's too much debt and there are not enough buyers, the Fed will step up their pace. In this case, it will be a dramatic escalation and it won't end well. You came here for the truth, so let me unveil that for you. I want to get into something a little different today. I'm not just going to cover the news, but I am actually going to explain the interaction between the Federal Reserve and their ridiculous money printing, the Treasury, and what we have seen with debt and deficits, and how all of this correlates and why it is so critical to understand right now in 2020. I'll try to make this concise as I possibly can, deliver it to you in a simple way. Let's see if I can get that done. Directly from the Treasury's own website, during the April to June 2020 quarter, Treasury expects to borrow, look at this, $3 trillion in privately held net marketable debt. We have seen the debt expanding at a rate that is not comparable to anything we have seen before. The levels are truly historic. Everything is climbing so fast. And we now have this second round of stimulus that's coming through. And of course, that isn't going to make things better on this front, that's for sure. If you take a look at what has happened to the GDP over the years, you can see that slowly but surely it's been growing. Now we know that that's a manipulated number and so on, but let's just take that as the quote unquote real economy. And you can see the expansion of that has been off the chart. There is no other way to put it. When you look at this, there is a divergence in between the two, and every year it gets worse. The expectation is that if we can only grow faster, that these two will correspond and we won't have to worry about the amount of debt. Just grow faster. But they can't do that because printing money and deficit spending does not make you grow faster. It actually makes things worse. But they can't see it like that. Of course, we know what happens in the central banking system and the reason why it funnels money to the globalist elite and not to the average person. This has been well documented, not just on this channel, not just in my books, but of course in many places. This is out of Guggenheim Investments. Treasury issuance will shatter records in 2020. Their forecast for 2020 is over $5 trillion. And if you look at what has happened right now with the stimulus packages, how many will there be in 2020? Is it just going to be the two? That actually might not be very likely. They might have to go for a third. They might have to go for a fourth. How long will it go for? And how far into the hole will they be willing to go? $5 trillion seems to be fairly conservative. None of this ever ends well. You can study every single empire and they do the same thing. They try to use deficits, debasing the coinage, spending more than they have. They spread themselves thin and they weaken themselves as a result. There are many different reasons why it happens over the years. It could be specifically with the financial system. It could be political. It could be two sides, opposing sides clashing. There's so many different ways, but ultimately the end result is the same, and that's failure. This is a little bit of humor here because with Goldman Sachs, they are basically tracking what has happened with the central banks using data from Bloomberg and Haver Analytics. Central banks have resumed asset purchases, this is the funny part, at a fairly rapid pace. I would have to disagree with that term, but let's just move into the data. Change in sovereign bond holdings since January as a share of the GDP. You're looking at the Fed, the ECB, the BOE, and so on. All of them have expanded their balance sheets, and all of them are doing the same thing. They're printing money out of thin air, and they're buying up debt. They're buying, in some cases, ETFs. They're buying corporate debt. But the way I look at it is that we have fiat currency being printed, more likely entered zeros into a computer. They use that to buy up this fictional thing called debt, and somehow that's supposed to create prosperity and productivity, which will then be measured by the GDP. It's nonsense. It's nonsense. We see the largest increase in free float in the US. Free float is the sovereign bond holdings less central bank and foreign official holdings as a percentage of the GDP. This is a breakdown here, and I just wanted to show you different countries, what they're doing. I like to see this measured on different scales. When you look at the activity of the central banks, I want to see it in dollar terms or their own currency. I also want to see it as a percentage of the GDP. I want to know what they're buying. I want to know when they sell. All that information is so critical. So I'm just showing it to you. Let's move on. This is directly from the Treasury's own website, major foreign holders of Treasury securities. I give you updates on this regularly here on the channel. The newest information we have is from March of 2020. As you can see down here, it shows May 15th, 2020 is when they update it, but the newest numbers are March 2020's. China, you can see, is still over $1 trillion, but it was reduced from the prior month. I'll show you the chart that corresponds to that. Japan still at the top of the list. You can look down here at the other countries. As I always mention, when you see this, don't necessarily take the particular country as being the country itself. Cayman Islands, I really don't think that the Cayman Islands country is buying up this much of the US debt. It can use it as shell corporations within those particular countries. That applies to many here on this list. You can look at the totals as well on here just to give you an idea of what's been happening. I've shown you charts right now as we have seen the movements through 2020, and there's been some changes, nothing too drastic except for March month over month was significant, but I would be interested to see if that plays out next month as well, because if it becomes a trend, then we've got an even bigger problem as the Federal Reserve needs to ramp up even further. Remember, we need a buyer of this debt. The Federal Reserve doesn't want to buy it, or at least that's what they say, but they will have to if countries, investors, they don't buy it. Monthly change in foreign treasury holdings. So you could see right here, there was a big drop. And the reason here, of course, is because of liquidity. This is very liquid, so they can move these out of their portfolio, get that for whatever they need it for. It is a big change when you see it month to month, but I need to know if that's a trend. We'll see what happens. I'll try to provide you with more detail as I find it out. This one here is the monthly change treasury holdings of foreign official institutions. This has been going on for quite a while. In fact, you have a strong US dollar. There are other reasons that this is happening. Domestic holders have actually been purchasing a lot throughout 2019, and I want to get some new numbers on that as well. Monthly change treasury holdings of foreign private investors, that has declined as well. Here you can see what China has done and what Japan has done. Japan continues to buy more and more of the treasuries while China has been selling these off. I always like to highlight this point here because the peak for China was actually back in 2013, and there's a distinct trend line that's been going on for a while. They were over 1.3 trillion at one point, and of course as time goes on there's ups, there's downs, but the trend has been that they are selling off the debt. They still have over $1 trillion. It's still a significant number, but I really keep a close eye on this because I do think it is significant. Out of Bloomberg, an $8 trillion spree sets clock ticking for bonds judgment day. That spree may overwhelm market if central banks step back. So Bloomberg is also highlighting the same issue, and I wanted to go into it just a little bit. Global bond buyers may only have a year until the good times run out. The multi-trillion-dollar wave of government debt sales has found seemingly endless support as nations around the world raise cash to fight the economic hit. The US sold a record amount of debt. German long-dated offering drew the strongest demand since 2012. The UK's first ever syndicated 10-year sale received 7 times as many bids as needed. Australia had the biggest ever offering. So clearly there's demand for this debt despite the fact that the yield is extremely low. In the bottom paragraph, they're basically saying that so far it's been working, but at the whiff of a recovery or a pullback from policymakers, all bets may be off. Throw in the threat of inflation amid a global fiscal splurge exceeding $8 trillion, and bond investors look set for a toxic cocktail of risks in the not too distant future. This chart here is just highlighting Australia's syndication bond issue. Now you can see right there a back-to-back record high. But there's a quote at the bottom. Can governments continue to borrow at such record levels? No. Central bank support is the key in the massive bond buying, and that is 100% fact. There's no other way to put it. Quantitative easing. Major central banks are buying bonds to support their economies. The Fed, the ECB, the BOJ, BOE, and the BOC all doing the same thing. They're all printing a heck of a lot of money right now, going into avenues they never have before, but ultimately diluting the value of their currency, which screws over the savers. Quote at the bottom, given the massive central bank easing, which includes a lot of bond buying, QE in many places, there will be a lot of demand right now to buy government bonds. The problem here, of course, is that you've got just one particular issue. If the debt is rising in a linear fashion, investors might be able to match it. But when it goes parabolic, as we have seen here with the trillions and trillions of dollars that are all of a sudden being piled up, investors cannot do the same thing. But the central banks can come out and simply monetize that debt. This is extremely dangerous. It has never worked in history, and that seems very likely that that is the direction that they will go. This is from Shadowstats, and I wanted to show you something because he's highlighting what we have seen with the unemployment numbers as well as other things. I thought it was interesting because, you looked at the BLS and what they provided. The actual Labor Department said the numbers are not accurate, but we're not going to revise them. About 7.5 million people in the April household survey were misclassified as employed instead of unemployed. I showed you the quotes from them, and nothing's changing. So essentially, right here, the headline April U3 unemployment at 14.7 should have been 19.5. Per the BLS, headline data will not be corrected. To maintain data integrity, no ad hoc actions are taken to reclassify survey responses. It's ridiculous. It's ridiculous what they're doing, but of course, nothing surprises me anymore. So that would put the U6 unemployment rate, which currently shows 22.8%, up to 27.7%. This is extreme. This is beyond what we saw in the 1930s. And that's their statistics from the government themselves. Shadowstats have their own way of calculating it, and they actually break it down and tell you what it's all about. But essentially, we're looking at a more broad definition of the term unemployed, including underemployed people and so on. Their number is now 39.6%. The US has never seen anything like this in history. This is why they're expanding their deficit. This is why they're willing to go so far, because the numbers are actually so extreme. And of course, it's not just going to turn around. You don't flip the switch and suddenly it turns back on. No, it's not going to work like that. There are major problems ahead, and if you look to the Amazon stock, you're never going to see that. You need to break it down and truly understand this debt-based system and how it all operates. I thought this stat was interesting, and I always get requests from different countries around the world. Do videos about my country and so on. This is for the UK. 23 million people, which is half of all adults, are now paid by the state. This includes people being furloughed on unemployment benefits and public sector workers and pensioners. That's unbelievable. That cannot be restored in a short period of time. There's no possible way that this is going to end well. Well, I hope you found this video informative. I hope you can see the connections I'm trying to make. It's difficult to put it all together. The puzzle is so confusing sometimes, but I hope I brought something useful to you. If you appreciated it, hit that thumbs up button to support me. Thank you very much. If you want to check me out on Instagram and Twitter, I do content every single day at The Money GPS. Learn how to sell stuff online for free. Do not pay $1,000 for a course. I've got it for free, theamazongps.com. My 2 books explain everything you need to know about the financial system in a very simplified manner. If you want to take a look through them for yourself, you can do so at the link in the description. If you want the audiobook, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? Well, if not, you definitely want to watch it. Click on it. I will see you there.